And our mission. Pretty simple. Give you a clear path understanding what Gharar actually is, why it matters so much, and crucially, when it can actually, void a transaction. Think of it as the essential guide. Okay, so let's start right there. What exactly is Gharar? What's the fundamental idea?
Right. So at its heart, Gharar is basically a characteristic in a transaction where some part of the outcome is hidden, or maybe its existence isn't even certain. It could be there, it might not be. It means the results of the deal, or maybe even the thing being traded, are kind of ambiguous or unknown, and the general Sharia ruling is very clear. You can't make a contract or add a condition to one if it contains the kind of Gharar that invalidates the deal.
Invalidates. Okay, so this isn't just like a minor technical point we're talking about.
Oh, definitely not.
It can actually unravel the entire agreement.
Exactly. That word invalidates is key. It means, from a Sharia standpoint, the contract is void. It's essentially treated as if it never happened. But here's where it gets more nuanced. Gharar isn't just one single thing. It's actually classified by how significant it is. We talk about kathir, which means much, or significant uncertainty. Then there's mutawasit, which is moderate, and yasir, which means little or insignificant. Now, kathir or gharar, that's the big one. It's substantial uncertainty. It often sort of dominates the contract itself, might easily lead to disputes, and it definitely voids the contract. Figuring out if it's kathir often comes down to, well, common understanding or custom, what's called urf. On the other end, you have yasir gharar. This is minor stuff. Often, it's kind of unavoidable in deals, It typically doesn't cause fights and doesn't affect the contract's validity. And this difference is really important because the goal isn't zero uncertainty that's impossible in business. It's about avoiding unacceptable levels of uncertainty. Mutawasi, the moderate kind, well, it's in the middle. Its effect, it depends. Might invalidate, might not.
Okay, that makes a lot of sense. So it's not just if there's uncertainty, but how much. That's really where the rubber meets the road, isn't it? You can imagine, like in everyday life, a tiny unknown is usually fine, but a massive one, well, that changes everything.
Precisely. And just to note, this Standard 31, it covers Gharar across all sorts of contracts used by Islamic financial institutions, sales, partnerships, even donations sometimes, though how it applies can change a bit depending on the contract type.
All right. So if we know that some Gharar, the yasir kind, is okay, what specifically pushes it over the line? What makes it the type that actually invalidates a transaction? The sources mention a really specific checklist, right?
Yes, exactly. It's not vague. For Gharar to invalidate a deal, 5 specific conditions, they all have to be met. Not just 1 or 2, but all 5.
Okay, let's break those down. What's the first one?
First, the Gharar has to be in what's called a financial exchange contract. Usho ose, or something equivalent. So basically, deals where something is traded for something else. Think sales, leases, partnerships. It generally doesn't apply with the same force to, say, charitable gifts where only one side is giving.
Got it. Exchange-based contracts. What's number 2?
Second, the uncertainty needs to be right there in the contract's formulation. That's the offer and acceptance, the siya, or in its subject matter, the mahal. So the ambiguity has to be core to how the deal is struck or what's actually being traded, not just some minor side detail.
Okay, core uncertainty. And the third, we touched on this.
Third, it absolutely must be kathir, significant, substantial uncertainty. Again, not just any unknown, but enough that it's likely to cause a real dispute, or where the deal feels more like speculation than a proper transaction.
Makes sense. Significant impact. Fourth condition.
Fourth, the Gharar must be about the primary subject matter, the LUAR. This means the uncertainty has to relate to the main thing being bought, sold, or leased. For example, if you're buying a house, uncertainty about the exact closing date might be manageable, but uncertainty about whether you're actually buying the house or just the land it sits on. That's primary subject matter, Gharar.
Right. It has to be about the core item. And the last one, this sounds interesting.
Yes. The fifth condition is crucial. There must be no recognized Sharia necessity for entering into this contract despite the kathir Gharar. And necessity here isn't just, oh, it would be convenient. It means a situation where avoiding this specific contract would cause real significant hardship or severe difficulty, maybe not total ruin, but serious problems. And importantly, there aren't any other permissible ways to achieve the same goal without facing similar hardship.
Wow. Okay. That necessity clause, that has a whole layer of practicality, doesn't it?
It really does. It shows the system isn't rigid. It balances principle with the genuine needs and complexities people face.
It definitely raises that question of, when is a need so compelling that some uncertainty becomes acceptable? Finding that balance. Okay, let's make this even clearer. Examples always help. Can you walk us through some common scenarios where Gharar pops up in these exchange contracts? The sources have some really good ones, I remember.
Absolutely. Let's look at where it tends to show up. First, sometimes it's in the contract formulation itself, the OICOA. This happens if the way the offer and acceptance are phrased creates the uncertainty. A classic example is trying to combine two different sales into one single transaction, UCOA and OA. That's generally not allowed because it makes it unclear which deal is actually being agreed upon.
Like saying, I sell you this car for $10,000 cash or $12,000 on credit in one breath, without specifying which one is chosen right then.
Exactly that kind of ambiguity in the offer acceptance. Then, a really common area is Gharar in the subject matter. The okishulo. Lots of examples here. For instance, ignorance about the item's key details. If you don't know its basic category, like is it fruit or grain, its specific type, which kind of fruit, or which exact item it is, this specific sheep versus that one, or if its qualities vary wildly, any of that can invalidate the contract.
So no buying mystery boxes unless they fit very specific exceptions, basically.
Pretty much. Another big one is ignorance of the quantity. Ususuyu, usually not knowing the exact amount invalidates a sale. However, there's an exception for selling by estimation called hususu if the item is right there visible, and it's clearly a large amount usually sold that way, like a whole pile of wheat or dates. The idea is you can make a reasonable visual estimate.
Okay, that makes practical sense for bulk goods.
Now, here's a really interesting part. Gharar in the price or rent, usususuo. You might think uncertainty here is always bad, but actually, it's often overlooked. Susu, meaning it's permissible.
Really? That is surprising. How does that work?
Well, think about agreeing to sell something at the market price on the day of delivery, or maybe whatever the price settles at. As long as there's a clear, known mechanism or reference point for determining the price later, even if the exact number isn't fixed at the moment you shake hands, it can be okay. This also covers things like istijar sales, continuous supply deals where you might get, say, milk delivered daily, and you settle up based on the going rate or a pre-agreed unit price, even though the total quantity isn't known initially, and ijar mithil renting something for the customary or market rent.
That's fascinating. So Islamic finance isn't always about rigidly fixed prices known years in advance. It allows for flexibility using recognized benchmarks. That's quite practical.
It absolutely is. Then there's Gharar related to timing, the che. If the payment term is unknown, that generally doesn't void the contract if it gets clarified right there in the contract session, or if they just agree to cancel the term and make it payable immediately. And similar to price, a bit of uncertainty in the payment delay is often overlooked if it's tied to something well-known, like payment at harvest time. Everyone understands roughly when that is.
Okay. What about issues with actually getting the item? Delivery and existence.
Right, crucial area. First, inability to deliver. If the seller simply cannot deliver what they promised, the contract is void. Pretty straightforward. Then, selling what one doesn't possess. A day. Generally, you can't sell something you don't own yet. That's invalid. Similarly, selling something before you've taken possession of it, either physically or constructively, also generally invalid. And selling non-existent things, selling something that doesn't exist yet and might never exist, that's usually invalid too because of the huge uncertainty.
Okay, those seem like fundamental protections against speculation. But aren't there exceptions? Like, what about ordering custom-made furniture or paying farmers in advance for crops?
Exactly. You've hit on the critical exceptions. Contracts like salam, where you pay upfront for specified goods to be delivered later, like agricultural produce, and istisna, a contract to manufacture or construct something specific, are allowed. These are vital exceptions based on established need and custom, but they have very specific rules within them to manage the inherent uncertainty about future existence or delivery.
So the exceptions prove the rule, but also provide necessary flexibility.
Precisely. One last point on subject matter. Not actually seeing the item. And if you sell something that's absent without describing it properly or the buyer having seen it before, that's usually invalid Gharar. But it is permissible if it's sold based on a clear, detailed description, or if the buyer did see it reasonably recently and it hasn't likely changed.
It really is like the difference between buying a mystery box online with zero info versus buying something with good photos and specs. One's a gamble, the other's informed. Okay, we spent a lot of time on sales, which makes sense. But does Gharar work the same way in other kinds of agreements? What about, say, pledges or guarantees? They seem different.
That's a great question, because the application does change based on the contract's nature. For a pledge, or goye, the general rule holds. What's impermissible due to Gharar in a sale is usually impermissible in structuring the pledge. But finding Gharar doesn't automatically dissolve the pledge itself. It usually means the underlying debt needs sorting out once the Gharar is cleared up. Now, for a guarantee, here's a really significant difference. Listen to this. What's impermissible Gharar in a sale is often perfectly permissible in a guarantee.
Wait, really? So you can have more uncertainty in a guarantee?
Yes. Things like guaranteeing something conditional, or for an unknown future time, or guaranteeing obligations that aren't even fully fixed yet. These can be okay in a guarantee contract. The reasoning is that a guarantee is fundamentally an act of goodwill, of providing security, and it's not primarily in exchange for profit like a sale. So as long as the Gharar doesn't undermine the core purpose of providing security, it's often tolerated.
That is a huge aha moment. Seriously, that shows just how nuanced this is. It's not some rigid blanket rule. The system adapts based on the purpose of the contract exchange versus benevolence. That's really clever.
It really is. And quickly for agency. Some Gharar might be okay if custom or other context makes the agent's scope clear. Like a general agency to manage my property is usually fine, unless it's an agency where the agent gets paid a fee. Then it starts to look more like a lease or hire contract, and the rules on Gharar become stricter again.
So the payment changes the nature, and the rules follow.
Exactly. And one last thing, Gharar in conditions. If you add a condition to a perfectly good contract, but that condition itself introduces significant kathir uncertainty about the core agreement or the main item, that condition can invalidate the whole contract.
Wow. Okay. So pulling this all together for everyone listening, what's the big picture? We've gone through this really intricate world of Gharar. What's the main takeaway?
I think the core idea really is that Gharar isn't just about any uncertainty. We all deal with uncertainty every day. It's specifically about unacceptable uncertainty, the kind that's likely to lead to disputes or injustice. And Islamic finance defines this unacceptable level very carefully, using those conditions we discussed, looking at the context, especially in financial exchanges. It really highlights the precision, but also the underlying goal, fairness and clarity in dealings.
Yeah, it feels like it's all about ensuring everyone is on a level playing field, knowing what they're really getting into. But crucially, with enough built-in flexibility, like we saw with pricing or guarantees, to actually function in the real complex world. This deep dive into Gharar, it definitely leaves you thinking, doesn't it? It makes you wonder, what are the terms we use every day in financial law? Seem simple on the surface, but actually hold these deep layers of meaning and nuanced rules, all working towards fair and just outcomes. Something to ponder.